Okay, welcome everybody to this evening's XAUUSD webinar. My name is Nathan Cooper. Tonight's webinar is Forex Trading Live Market Analysis, which we'll get into in a moment. Coming up tomorrow, we'll be going through. I can get my screen to move along. Tomorrow, we'll be going through the 4-hour trade entry, position trading using the 4-hour charts. So if you want to join me for that, then just register your interest at our webinar page. And just bear with me a moment, I'm having a couple of technical issues. All right, I think I'll be okay now. So just register your interest if you want to join me for that webinar tomorrow. And before we move along today, if you can all read through the disclaimer, that would be great. Any questions to the web chat box or the question and answer box. For those on our YouTube live stream, I can't see the chat there, but you're more than welcome to watch. And I've given you the link to join us if you want to join us in the webinar, so you can talk to me. So everybody, please just read through the disclaimer before we move along this evening. All right, let's move along. So for those that don't know me, my name is Duncan Cooper. I'm Senior Market Strategist and Trading Mentor here at AUDJPY Securities. And I'm a full-time Forex trader, been trading in the market now for more than 20 years in the Forex market. Mentoring for more than 10. If you want to contact me about the webinars, my email is there, duncan.cooper@acy.com. And if you want to follow me through the week at our website, acy.com, go to the market news tab. At AUDJPY Securities Australia is our YouTube channel. And if you want to connect with me personally, my Linktree page is there. And if you want to get access to the charts I'm using tonight for MT4, just contact Nathan.bray's emails on screen. And for those in the webinar, I will put his details in the chat. There we go. All right, so let's get into, first up, the news for the week. So quite a big week for the news. I'm on forexfactory.com. Times shown are set at my time, Queensland time. So just need to refresh. All right, so coming up this evening at 10:30 p.m. my time, Canadian CPI data, median trimmed coming out. So Canadian crosses could be volatile as we get the inflation figures coming out from Canada. Be aware of that. Wednesday tomorrow, it's usually 1:30 in the afternoon my time. We got the JPY budget policy rate, monetary policy statement, budget press conference. So yen pairs, difficult to trade them at the, leading into that tomorrow. If you're trading today, difficult. I think they have generally been discussing the idea of higher interest rates, whether or not they will be raising interest rates or discussing that as a long-term theory. We'll have to wait and see what they say tomorrow. If that is the case, though, that would potentially be yen strength, which would mean that pairs to the yen would move down. Into Thursday, 4 in the morning, we have the US federal fund rate, FOMC economic projections, and FOMC statements. FOMC press conference at 4:30 is going to be volatile there for all pairs, especially US cross-based pairs. Not expecting a cut, although I would say that the data from the US, generally speaking, over the last 30 days has been rather weak. CPI and PPI declined last week. Week before, the job figures, unemployment went up. So we may see rhetoric from the Fed saying that maybe we're going to get more cuts this year as the data is a little bit weaker. We'll have to wait and see. 7:45 for New Zealand on Thursday morning. We have GDP QQ. 10:30 for the Aussie employment change employment rates. 5 p.m. for the pound, we have employment count change. 6:30 p.m. Swiss franc monetary policy assessment and policy rate, expecting 25 basis point cut there for the Swiss, and press conference at 7 p.m. Then for 10 p.m. for the pound, we've got monetary policy summary, the bank rate votes and the official bank rate. Not expecting any change there in the interest rates. Maybe the vote will not be 090, which is 9 people wanting to cut rates, a much lesser vote for cutting rates. Okay. So it's going to be volatile at that time with pound crosses, 10:30 p.m. with the Bank of England Governor Bay speaking from that interest rate decision. US unemployment claims at 10:30 p.m. also. And then moving into Friday, 2:50 in the morning, Canada, Bank of Canada Governor Macklem speaks. 10:30 p.m. then in the evening, core retail sales and retail sales for Canada. So the big one for the week will most definitely be the FOMC statement from the US, but there are other countries, Japan, Switzerland, UK, all doing interest rate decisions this week. And Canadian CPI dollar as well. All right, so lots to consider. Make sure you know what's coming out each day. All right, let's get into charts now. We've been seeing a predominantly strong move against the US dollar. A bit of a consolidation week last week because we had a very large week down. Last week was rather small. As pairs to the US dollar are moving to a new high. Dollar index hasn't quite done that yet, but this is my weekly chart, and I've been saying that potentially we could be, this is like a 62% retracement. Are we going to come down to test support, 99.85, and are we going to maybe move down through? So predominant weekly downtrend has formed. I would not be trying to trade against that trend at the moment. Day charts maybe just having some form of pause on this day chart low here. But if we move below 103.26 this week, I would anticipate that we are over time going to be moving down to test that major low at 99.85. And if that's the general direction, then expect pairs to the US dollar to be moving up, which they are doing. So S&P 500, yes, it's been selling off, and there's been lots of discussion from, people saying that with, market's crashing. But when you look at I'm going to go to the monthly chart, and all we're doing is having a 62% retracement on the monthly range. For us to change trends, we would have to break a monthly low, and we're not doing that. So this is a monthly correction, 1 month down. Like we had on gold, we had one month down, and then we've gone to a fresh high. So I'm not getting too excited that we're in crash mode. We're just in corrective mode. Now the weekly trend is down, but we're overextended in the downward move. Even if we're going to move down further, I would expect maybe we're going to rally to put in the lower top if we are going to have further downside. But this moving back to the 62% level here, I would start to maybe anticipate that maybe that is a significant low. And we may see over the coming few days that the day chart may form a higher bottom. So I would be at the moment sitting on the sidelines, waiting to see if this forms a higher bottom in some form. If it does, then really, like you're saying, we're looking to buy the dip against that monthly correction. Just a correction at the moment. All right, so I will be waiting to see if the day chart can put in a higher bottom. If it does, and you like to trade the indices, then start looking for your setup to get long. And if we get commentary from the Fed saying that we're going to maybe see more interest rate cuts, that's only going to be stock market positive. And some you're saying 7-9% interest. Yeah, I mean, it could come deeper down here if it wants to. But I don't know, it's had a nice bounce at the 62 there. So I would be just monitoring in any event, whether we break that low, is waiting for a high bottom to form. And then getting ready for at least then some form of corrective move back up here. Now we may form a lower top on the weekly chart at some point, but I anticipate that we're going to come back up and have a rally up here, first of all, at some point. So I would be, looking for my setup get long if I trade the indices. But yeah, over the coming week, have we put in this low here to form a higher bottom, or do we come down to 79% level and then reverse and form a higher bottom? Those are the things I would be looking for. All right, euro dollar, very clearly a new high is being formed. It's very strong up here. I would not be trying to get short. Next major level is at 110, the 79% level, which is a 109.91 of this major range here. I'm inclined to think that this may come up to test these highs up here. It's very strong. I would need to see some significant signal on the daily chart before I would look to get short. So at the moment, I've discussed this. I discussed in early January when we're down here that these imbalances potentially need to be filled. And this one to get filled, need to get to 111. So we can definitely get there this week for sure. All right, so at the moment, I would look into the 4-hour chart, and as and when, look for a dip on the 4-hour chart. I'd be dragging my fib upward from the last high bottom to the top, keep dragging it up, and then looking for a 62 to 79% dip. Looking to buy a dip, or as and when the market can offer you the dip. Wouldn't be looking to buy at the top of the move, but looking for the opportunity to buy a dip. We'll just have a look at the 15-minute chart. See, in a strong trend, we only get to the central pivot point. The day before, central pivot point, we're up. Today, central pivot point, and we're up. These are the areas where you should have been looking intraday. Central pivot point yesterday, central pivot point today. 109 at the moment is offering support here. Market's not getting to down to 109. So over the coming couple of days, as we get to a release of the FOMC statement, 109 would definitely be an area to watch if we had a corrective dip, because cleared it Monday, we couldn't get down to it Tuesday, so quite clearly buyers are coming in slightly ahead of 109. So 109 would be a good buy area to watch if we did get a decline post FOMC. Other than that, as I've just been saying, I would be dragging my fib across the 4-hour range, which is here at the moment, and looking to the 62-79% zone, whatever the numbers are at the time, for a reversal back up. All right. Euro yen, it's been very strong. It is range bound here on my weekly chart. So, and we do have of course, the Japanese monetary policy statement coming out this week. So I would be very cautious up here at resistance. 164.89 weekly resistance, and there is monthly resistance over here too at 164.29. So we're coming up to a resistance area. Been range bound for 1, 2, 3, 4, 5, 6 months here. So I would allow this to come up to the resistance area and then see if I can start to see my day chart. Do we reject up here? And then can I start seeing a lower time frame setup that I like? All right, so we're coming into a sell zone at the moment. Now, if we break above, if we clearly break above this week, then I would watch 164.89 to be support to trade up off on an intraday pullback. But at the moment, as we are generally range bound on the weekly, we're coming into the area of resistance at the top. So I would be watching to see if we want to turn around up here. Much like when we came down here to support, look, there was actually on a 4-hour chart down at the bottom, some form of head and shoulder pattern formed down here. Left shoulder, head, right shoulder, inverse. All right. So what I want to see on my 4-hour chart up here is, am I seeing anything that's starting to tell me that a resistance now, we want to move back down. And if we do start to want to move back down, then maybe we're going to come all the way back down to where we came from. All right. So that's what I would be looking for. So I don't have a sign. I don't have a setup or a sign at the moment. I just know that we're getting very close to an area of resistance. And then I want to see price action tell me something that maybe we're going to top out and move back down. The euro pound last week, I said, watch 84.47. We traded up to that level. This week, so we have a range here. There's a 79% level here. I would look at this smaller range at the moment. The fact that we failed at the 84.47 level last week, I would start to look at 84.30 to 84.48. That would be my zone to watch for failure on the lower time frame to move back down. All right. See all these shadows on these candles? If we start to see the same price action up here at 84.47, assuming we can get back up to 84.47, if we see the similar price action here, expect that we're going to move down and look for your setup to sell. All right, pound dollar. I'm looking for the pound to come up to these imbalances up here. So somewhere up the 133.30 level up here to fill the final one. Now at the moment, go to my weekly chart, we are just coming into a weekly area of resistance here. All right. As I've been saying, dollar index is very strong to the downside. Day chart's very strong to the upside here at the moment on the pound, even though this is the weekly. The big question is, are we just coming up to a rally point? 79% level overlaps with this weekly high over here. So that may be a good seller's level for people if you're looking for the opportunity to sell at some point. That's at 131.42, because most definitely we could see, get my drawing tool to work. This could be down, rally down. All right, so 31.48 is definitely a barrier where the market could hold at and maybe start to set up for that kind of move back down the opposite way. But we'll have to wait and see what happens when we get up to 131.48. And personally, I don't know if we will hold there because of these imbalances up here. I think price will maybe want to come in to fill these first of all. So we may see a move above there to fill the imbalances up here. And then we might top out. So I think we're going to get up and close to the actual high at 134.33. We're going to come up to here or move through and above to put in a fresh high. But over the coming, say, 4 weeks, I would say as levels to watch, most certainly 131.42. And if you come up to 134.33, even if you trade above it, that was last year's high. So I would expect at least if we trade above there, that will then pull back a little bit before the market tries to move higher. All right, so I would expect that potentially we could fail up here. But obviously we'll have to wait and see what price action does as it comes to these levels. At the moment, getting into a trade, again, I would do the same as I'm looking in the euro at the moment, is look into the 4-hour chart. So a very minor pullback here. I mean, if you're negative the pound, we're definitely weekly resistance at the moment at 130.01. So it is a seller's level if you're negative the pound. I'm not negative the pound, so I'm not really looking to sell. I'm looking for an opportunity to be a buyer. I'll probably draw my fib from down here. All right, and look for the next dip. All right, so keep extending the fib up if we keep moving up, and look to the 62.79% area for a dip. With the FMC coming out, levels to trade to the upside. This previous weekly level here at 28.93. So the 129.00 level this week, I would say if we get an FOMC dip, watch 129. All right, I'm really only focusing on dips for the pound at the moment. So 129 would be an area to watch for a dip if we get a healthy dip. That's only 89 pips away, so it's not miles away. And it could also be drawing a fib from last week's low to the current high because we've just broken last week's high, and watching for a 62.79% retracement of that range. So the 79% level, 28.91, overlaps with the 28.93 weekly high to the left. So that's all very close to the 129 level. So at the moment, that would be a focal point for me if we got back down into the area. But our price would obviously need to have a nice healthy dip. So, when price is so high in its strong trending move, it's very difficult just to be buying at the top of the move. I always like to look for a dip. And like I was just saying on the Eurodollar before, all we could do on a dip intraday today was at the central pivot point. Now, we may have already put in the low for the day. So what I will be looking for just as an intraday level with these strong pairs at the moment is as we move into a new day, so the next day, is look for price to retrace back within the range of yesterday to the central pivot point. All right, now it's done that today. It's done that on the euro today, did it on the euro yesterday. All right, so you have to know where the level is. It'll obviously be around when price action is coming down to that area. All right, so it probably won't come down there today. I mean, it could, but maybe we've already missed the opportunity to trade there. So you're going to have to wait for tomorrow's opportunity where it could pull back to the central pivot point. All right, so continuing looking for opportunities to trade dips. Aussie yen. I want to go to let's have a look at my monthly chart. We have a massive rejection candle here. And I'm thinking that this is a pullback here. And we're putting in some form of significant bottom here to move up. Now, the weekly trend is down at the moment. It is just trading into weekly resistance. So, I mean, if you're a seller, that is a level to watch for reversal down this week. Personally, I'm more bullish because we had a double bottom on the day chart. So for me on the day chart, we have this double bottom here. And I did say if you break the high of the day before, forming the double bottom, we could be moving up. And since then we had a day down there, but to form a higher bottom. And the little double bottom down here. Price projection is up at 97.57. High to the pattern projected above. So for me, the bias is to be trading long towards that target. Right now, we're just trading into weekly resistance, so it's not the best area on the chart to be a buyer. That's the current for our move up, so I would look to that range. That's just my double top target there. I would look to this range now for the market to offer a pullback to 62.79% zone. All right. And again, keep trading the dips. We can all see where the trend is this week. It's up. All right. We obviously moved up here, had a dip. Then we've moved up again. So we want to have a dip. All right. So on these pairs at the moment, you have to be patient. You need to wait for a dip. Don't get impatient and buy at the top of a move, and then a dip goes against you. See how the Aussie here, this is my 50-minute chart, couldn't get to the central pivot point, a little bit short. All right, so we're going to go on monthly chart, this monthly low here. I've been saying that this could be a long-term bottom, and I'm looking to trade up to 68.71 area up here. Generally the 69 area. That's where I think it's heading. Weekly trend is now put in a higher bottom. Haven't quite come up over the top yet. Mainly the job figures this week could pull it over that top, but we're in an uptrend on the weekly chart. Daily. Its weekly high here is that this could be a level where sellers could trade down from this week if you're more bearish on the Aussie than I am. I'm just bullish. Day chart's got a high bottom, high top. So again, looking for a dip. 4-hour range, look for a retracement inside the 4-hour range. So again, I would look to draw my fib from the high bottom to top. If price keeps moving up, keep dragging the fib up, and I look to this 62.79 area. 63.38 to 63.24 is that area at the moment, but that may change if price keeps moving up. All right, what happens in that area if we pull back? And in that area, we have last week's high. So we've broken strongly above last week's high. So last week's high could offer support now that we've quite clearly broken above it. So a good area to watch would be last week's high, which is 63.33, in between the 62 and the 79% level, okay? All right, New Zealand dollar. It's a bit stronger in its weekly structure here. It's moved to a higher top from the previous top here where the Aussie hasn't. Aussie dollar has put in a higher bottom, but it's yet to take out the top here where this has. I actually got long at 55.20 down here, and I'm looking to hold this up to the tops here at 63.69. Well, I'm going to wait and see what happens at 63.69. Can it break above there? All right. The barrier in the wave, of course, moving up there is this area at 58.49. Weekly chart trends up, but we definitely have a monthly level of broken support there at 58.49. So that's a level to watch. If you're way more bearish on the New Zealand dollar than I am, that would be a good level to watch for your sell setup if we hold there. Personally, even if it does hold there, let's say we do come up here and hold, I would look for this to be support now, this broken high at 57.72. I would look in that area for an opportunity to get long, whatever your setup is, to try and hold it, to trade up. So we have imbalances up here near the top that potentially need to be filled. So we're uptrending on the weekly and the day charts in a large monthly range. So look at the 4-hour chart. 4-hour chart, there's your last bottom. Drag your fib up. Keep dragging it up if price keeps moving up, and look for a dip to the 62.79% zone. Game of patience. You don't want to be buying at the top. Now through this week, obviously I'm saying wait for a dip. I don't know if a dip's going to come this week. Maybe we continually keep moving up as we're leading into FMC. FMC statement may be US dollar negative, and we further move up. And all the dips that we're seeing each day may be only minor dips back to the central pivot point through each trading day. Dollar Canadian. So we've had a major topping out. major false break topping out. At these 2 monthly highs, this could be a major reversal for a long-term move downward. Now, a double top price projection on this pair is down at 93.45, which I know is miles away, but that would be a very long-term move down. Back down to major support over here. So what we've been seeing is the weekly is putting in a lower top. That's been translating on the day chart to not a perfect head and shoulder pattern, but there's some form of, left shoulder here. I know there's a spike up here, but let's forget that spike up there. There's a level of resistance. That false broke that level of resistance to form a head. This came back up to that area over there. So some form of, not textbook, but some form of looking head and shoulders. And as well, it was a 79% retracement up here too. If all you did was trade at the 79% level, stop above the high, you're seeing nice profits. You can be targeting down at the 127 extension at this low here. So we're seeing a lower top forming now from that clear resistance, and it's not in the perfect level at the moment or perfect area to be a seller. If you still have the thought that you want to be a buyer on the dollar Canadian, this is a clear level of support here at 142.61. So I think the buyers should be watching 142.61 this week. We're not that too far away from there as I speak. Selling is a little bit more difficult. You should have been selling up here. There's always an optimum time, and up here was your optimum time. Because once we get to the 0 level, using the fib tool, anywhere from the 0 level down to the 127 extension is a profit-taking phase of the move. So you don't want to be selling in the profit-taking phase. All right, so 4 hour. Difficult to trade the dollar Canadian, I think, at the moment because of the Canadian this evening CPI. So I would have to see what happens from there. I would have to see what price action does after that. But most certainly, if it stabs down today on 142.61, which is weekly support, you stab below 142.61 and come back above, really then that's a buying level to at least expect price to have some form of rally from there. Right, so from the buyer's perspective, most definitely watch 142.61 today. I don't really have a sell set up there because the sell setup was back up here. So that's dollar Canadian. Dollar franc. We're in this weekly consolidation, large consolidation area. A little bit above this weekly high, sorry, this weekly low here. But we do now have formed a weekly downtrend. This is how I drew it last week, by fib from high to low. It's only a 38% retracement. I don't like it when it just does 38% retracement. So I would have much liked it to come back up here to this zone. To come down. So I'm not seeing anything there that I would want to have a stab at there on the dollar franc. Yes, the trends are down. I'd be cautious at this weekly low because 87.32, I draw a line there. It's really in the middle of my weekly consolidation area. When you get in the middle of a consolidation area, it can go either way. So it doesn't excite me to get short, even though I can see where the trend is. It doesn't excite me to get short in that area. So I don't have to trade something. Getting short for me, I would need to see price up in this zone. And the trend is to the downside, but it has to be, in there that I like, and I don't like where it is at the moment. So I would leave that pair alone. But the predominant trend is down, and we're probably, heading back down to the bottom area of consolidation on the long-term charts. Sam, you're saying if we pull back to the 79%, would it form a head and shoulders? Well, on this pair, no, because all we have is so it came up to there. There's no left shoulder over here. It's just a continuation of the trend. All right. So it would just be you're looking at that area to fail. It's coming down to 127. So you know you could be trading here, stop above the last lower top, looking for the continuation of the trend. All right, so dollar yen, difficult to trade this week until we get past the bodge statement. I just think from the major scale on the monthly chart here, we broke this low just, putting in a lower bottom. We've rallied up to put in a lower top, a little bit above the 79% level. And the big question would be for me in terms of, are we down? That would be my focus in terms of a long-term pattern. All right. Weekly, we've broken this low. So now we might come back up to form a lower top on the weekly. And on this particular time frame, we could see a head and shoulder pattern. If we came up very high. All right. So, of course, we're a long way away from up there. But if we got back up there, it may take a month for us to get back up there. If we're going to get back up there. All right. We may see a head and shoulder pattern form like so. So that weekly trend is down within the downward movement on the week of the monthly chart. The day chart, though, is just starting to show a bit of an uptrend here at the moment. Well, I mean, we have broken above that top there. We don't, and we do have actually a little minor higher bottom just here. So this weekly low here, I would be anticipating at the moment if this is going to hold this uptrend, that we false broke this weekly low over here and we're coming up the range here. We are 3 days positive, so I'd actually want to see maybe 1 or 2 days down. You know, post bodge, if we could come our level to watch for the buyers, if we're going to, you know, come down and then go up, come down and go up to, you know, have a rally up here, maybe back up to that left shoulder head as we're showing on the weekly, is we want to pull back to support now and can support hold. Where's support? Where's my primary support now where I'd like to trade up from? And that would be, you know, 148.63. And certainly we could retest that area when the bodge has its statement. So for me, yen pairs really this week, until we get past the bodge, I think it's dangerous to trade because you never know what they're going to do. So, and this uptrend that we're seeing at the moment could come to a quick halt when the bodge reports. So, all right, we'll just finish on gold, which is going to new heights. So, you know, the monthly trend is up. When I was talking about the S&P 500, see gold here had 1 month down, and now it's on its 4th month up. So S&P 500 may just have 1 month down and been up for the next 4 to 6 months. Weekly chart, higher bottom forming here on gold. This is at the all-time high, so this is all uptrend. Just, you know, if I was trading gold, do I want to buy so close to the all-time high? I think now that we've moved above this area, 29.56.14, that would be an area to watch for a pullback. We've had a clear break above there. We've obviously put in more high bottoms here on the 4-hour chart. That would certainly be an area to watch for a pullback, last month's high, over the next week. But breaking it down to a lower time frame, look at the 4-hour range. I'll look to the 62.79% zone at the moment for you set up to be a buyer, buying a dip within that trend. When we get FMC coming out, then of course things get a lot more volatile, and I would look to the lower level at 29.56 and see what happens if price was to pull back to that area. There is a bit of an imbalance as we broke above. So price may want to come back to feel this imbalance, which all kind of coincides with this area potentially offering support in this zone here. All right, so that would be a patience area to look for later in the week. All right, so it is a bit difficult at the moment. Lots of things are at the tops of their moves when we're looking at pairs to the US dollar, and you want to buy a dip, even if it's just an intraday dip to central pivot points on pairs to the US dollar. All right, not much of a dip happening at the moment on the euro. Same with the pound. So we've already been to the central pivot points. There's always the best time of the day, and I think we've missed the best time of the day. But I've said this time and time again, in strong trending pairs, price will only pull back to the central pivot point. Seen on the pound today, seen on the euro today and yesterday, and the Aussie couldn't quite get there. Couldn't quite get down to central pivot point, so that's just proving that it's strong. What does the New Zealand dollar do? New Zealand dollar has got nowhere near the central pivot point, so this is very strong. Even though price action may have only done today 20 pips, it's positive for the day just, and buyers are coming in way ahead of the central pivot point. They don't want to see price down here. All right. See, yesterday, price didn't get down to the central pivot point here. All right, this is very strong. So I would not be looking for an opportunity to sell. That would be a great area on the New Zealand dollar to get down to central pivot point 57.98 and 5800 here, if we could get down there today. But it's a patience game when you wait, when you're waiting to buy a dip. I know last week, I'm pretty sure last week on the pound, just want to squash this in. So Tuesday, Monday, Friday, Thursday, Wednesday, Tuesday, I thought there was a central pivot point down here, but there's not. I just thought last week I was discussing a central pivot point in the pound, but I wasn't. All right. But most definitely today, we can see there central pivot point support. Now that we've missed that, as I said before, I would look to tomorrow on these strong pairs at the moment. As tomorrow's price action comes around, do we once more pull back to the central pivot point and offer another strong opportunity to buy around that area for the bottom of the day to come in to move up? Now, at the moment, we obviously here have tested 130.01 on the pound, which is a weekly resistance area. And if you are Now, wanting to trade to the short side, maybe you want to fade down because we do have the interest rate decision coming out later in the week. Do you see set up here to get short? It is a seller's level, but it is going against the dominant trend. So, but if you see a setup, it could fade at 130 to trade down to 129. Do you see a setup? But looking at price action, say this is last week's high. So yesterday we tried to move above it and we moved below. See how today we traded above it again. We've obviously hit 130, but see this pullback, it's getting support on last week's high. So if I was a person, asking myself, am I bullish or bearish? And I'm seeing that happen, I don't think I'd want to try to sell it, because what I'm seeing as price action is doing its thing today is, today as it's moved above last week's high, it's pulled back and last week's high has become support. If you see that, that's telling you that the buyers are coming in and offering support. So even though we've had an initial bounce at 130, I would say, seeing that support come in, I don't think it will favor very well for the sellers at 130, because buyers now are wanting to hold price above last week's high. If they're wanting to hold it above last week's high, that's telling you they want to put in a higher high at some point this week. All right, so yes, there's resistance to that 130, but it could be a difficult sell for the sellers. And strong day chart trend here. All right, so do a good top-down assessment. We have a strong trend versus the US dollar to the upside. So I personally would not be looking for the opportunity to try and fade any shorts. Doesn't mean to say that shorts may not work, but you are going most definitely against the trend. So, if I can give you any good advice this week, is try to stick with the trend. There's a very dominant trend at the moment. I think the easier trades would be on the side to the upside. Okay. All right, I'm going to wrap it up there for today. And if you want to join me tomorrow, my webinar tomorrow will be the 4-hour trade entry. If you want to join me, there's the link at the top. Just register your interest, and I will see you there tomorrow, 8 p.m. Sydney time. Steve, you're welcome. Steve just saying thanks for the advice regarding the central pivot point in a strong trend. It's a very simple thing, but you can see on those pairs today in the strong trend how that central pivot point is offering support. So that would be the key to watch for at the moment. Pullbacks to those areas. It's an intraday dip. All right, I'm going to call it a day there. Thanks very much, everybody, and I look forward to seeing you next time.